The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.
Welcome to the COB. It's great to have your company this afternoon. I'm Kyle Rodder with Juliet Sarli. Obviously, Juliet, you're here, so it must be a Thursday. And, well, actually, let's see where the market finished up. Because we strung 3 days of gains together to start the week. Let's see where we are now on the CPO 200. Well, we'll call it flat. Yeah.
Yeah, indeed. And this is, as we've been mentioning, in terms of the final day of reporting season as well. So the day that companies had to file to the ASX by. And really interesting to see there was a bit of buying around lunchtime, maybe in the afternoon session as well, but we have ended fairly unchanged there.
Yeah, definitely. End of month as well. So we'll see how we open tomorrow, of course. The first day of spring. So I guess hope does spring eternal. But let's get to the three themes, shall we?
Yeah.
And well, I guess what have we got here?
Well, we're looking at the China data, and of course we did see manufacturing activity there contract for a fifth month. So that really alludes to the fact that is there going to be need for more stimulus to come through, particularly to support that property sector, which remains a big headache for investors globally. We've also been looking though at what happened with Qantas.
They still owe me money, Qantas.
So are you in that group of people that are going to be trying to get credit from them?
Well, I mean, yeah, for a different reason though. I booked a flight a couple of weeks ago, made a mistake on it, admittedly, but I changed it and they said, that's fine, we'll change it, we'll send you the refund. And the refund hasn't come back yet.
Well, I mean, that's only a week. We're talking about people that booked flights a long time ago, and that's why the ACCC has said that they are going to launch legal action against Qantas. So this is after it alleged that it was advertising and selling flights, 8,000, that it already knew were going to be cancelled as it tried to recover from the COVID pandemic. So Qantas, of course, saying this was a time of upheaval and an unprecedented time for the airline industry, but certainly Qantas shares have taken a big hit on that today.
Yeah, well, perhaps they lacked match fitness at the time. Maybe we can put it on that. But reporting season report card, you already mentioned it. Anyone who reports after today gets a little bit of a slap on the wrist from the ASX.
Slap on the wrist, yes.
But I think, well, I guess the constant feedback we're getting from people who have given us their appraisal on reporting season was that it's just really volatile.
Absolutely. I did a little bit of digging on FN Arena. Thanks to Danny for helping me navigate that site. Look, about 350 companies that they looked at the assessment there. 31% were a beat, 42% were in line, 28% were a miss. When you look at what happened in 2022, so a year ago in August, it's pretty much exactly the same. So you've got about a third a beat, a third a miss. So, you know, is that a theme coming through in terms of whether or not analysts are getting it wrong a third of the time?
Yeah, well, indeed, they certainly seem to be anyway. But let's look at some of the sectors of the day, shall we? See where the strength and weakness might have been found. We'll start with metals and mining, and that's a fairly mixed picture. I would imagine with Newcrest down, that might be a gold story once again. But BHP, Rio Tinto, and Fortescue all higher, which always helps.
Yeah, absolutely. A big jump there in Fortescue, which started the day in the red. Let's have a look at some of the consumer staples stocks as well. Woolworths, of course, going ex-div, so that very much weighed on its share price. Coal's looking pretty good. It was up by 0.4%. And Treasury Wine Estate was also ex-dividend today, so a loss of around 2% there.
Moving on to the telcos now. Let's see what we've got there. And Telstra up 1.5%. It was ex-div yesterday, so I suppose creeping back above $4, but it is down about 30 cents since the start of the month. Otherwise, a bit mixed. Aussie Broadband down 3.5%. I don't know if that went ex-div or not, but it was certainly a stock that flew off the back of its results. So even if that was a little bit of a dip.
Yeah, you spoke to the CEO.
I did, and I enjoyed that thoroughly.
I enjoyed your interview too.
Yeah, I thought he was fantastic.
Yeah.
So there you go. Some of the telcos there moving as well. TPG Telecom, I guess, topping the list from that perspective. But we flagged it. It was the last day of reporting season, and a few names, stragglers perhaps, reporting today. IGO might have been the biggest one. And I think it was actually largely responded to fairly well by investors, and a lot of that was probably to do with the fact that they did pay out a special dividend of 16 cents per share. Took the full year dividend to about 74 cents from memory. Maybe providing a little bit of a sweetener after that calamity in terms of the impairment cost at its, I think it was Western Areas mine, off the top of my head. That was big. But the share price up today off the back of those results.
Yeah, let's have a look also in the mining space at Sandfire Resources. A stat loss there after tax of $53.7 million US dollars. Underlying earnings loss of $45.3 million US. That was versus its profit of 138 or just under 139 million. No final dividend declared, as you would expect when you're looking at those kind of numbers, but they did look at what their spending plans for full year 24 are going to be and gave a guidance there of around $255 million. So that was one company that certainly had a bit of a miss as well when it came to its numbers.
Yeah, okay, so let's move on once again, and we're going to take a look at Austal now. I didn't give a close eye in terms of the share price response, I have to say, but it was a net loss of $13.8 million. FY24, I suppose we look ahead for when it comes to Austal, see if the conditions are expected to improve at all. An 8 to 10% lift in revenue and 3 to 4% lift in underlying EBITDA are expected. This is one stock that whenever it's brought up on the channel, it always seems to be never too well liked. I think it's just a risky business model, I suppose. Again, we'll probably keep an eye on, or we'll probably get an update in a second in terms of where the share price went. But there you go, there's Austal.
And let's have a look at Harvey Norman because, of course, this is our stock of the day, but a really big one there. Net profit of $539.5 million. Revenue coming in at $9.19 billion versus last year $9.56 billion. And it did cut its dividend. It says it's on track to opening 8 stores in Malaysia in full year 24. But this is, I guess, all of that kind of point. I was talking to Justin Smirk from Westpac earlier. Are the consumers helping the RBA kind of, in a sense, do their job by cutting back on big ticket items? And it often is that when you stop buying things like fridges, washing machines, is that a sign of the overall economy and the worry that people have for the economy? I have to say, although it's not going to be reported in this financial year, but next year, I will have contributed to that because my God, when you come back from overseas and you have to buy a fridge, a washing machine, a dryer. Thanks, Harvey.
Well, you're obviously an Australian, but you must be one of those sort of migrants or inflow of population that everyone's shaking their hands at making everything all expensive for us.
Oh, okay. Thanks. Well, I'm just still in shock because I've been overseas for so long that you have to buy your own fridge and washing machine. They don't come with the apartment like they do. Anyway, moving on. Let's talk more about the stock of the day.
We will. And actually, Danny Courier was at the helm of the show, and she had a chat with Josh Bark from Macro Capital as well as Grady Wolf from Bell Direct.
Norman is operating in a similar space and their results are pretty poor.
Yeah.
So given that, I'm actually going with a sell. Also diving into the results quickly this morning, operating expenses are up 8.1%. So with that, and the company have tried to, well, they have said that that's on the back of COVID restrictions easing and coming back into opening stores, but none of the other retailers are really reporting this, and they're all operating in the same environment. So cost control is a really big factor in when you're analysing a stock. So the fact that it's up 8.1% is not an impressive figure. And then, dividends are a massive pick for this reporting season, and investors will be very unhappy to see 33% down this year. So that's not impressive at all. So
been pretty bearish on the retail stocks for quite some time, and Harvey Norman's no exception to that. The expectations were pretty low on the stock, so I guess that's why we're seeing a slight rise today. It did come in above those. The dividends was largely expected, but they did increase their overall net assets thanks to their property portfolio. So that's what they've sort of chosen to focus on, and I think that's helping counteract a lot of the negativity around the actual numbers a little bit today. So happy to hold, but I'd probably be looking to work the sell side. It's recovering, but not a name that we'd like to be in overall.
Yeah, okay, so not a very positive appraisal at all for Harvey Norman, maybe not the time of the cycle for that one. We'll have to wait and see, but perhaps we'll get his appraisal now on the stock and, well, earnings season more generally speaking. David Lane from Ord Minnett is standing by. David, thanks so much for joining us today. Fittingly enough too, on the final day of reporting season. May as well start with our stock of the day. Do you like Harvey Norman? And on top of that, looking back over the last month, what are your key takeaways?
Yeah, well, Harvey Norman, it's one of those ones that it's really more about the beat rather than the actual result itself. So the result was down about 30% as far as the profit's concerned, but because expectations were so low, they actually beat those expectations. So hence we saw the share price rising today. It's a stock that, similar to the experts on the call, we've got a hold recommendation on it. Think that it's probably reasonable price at current levels, or fairly fully priced, I suppose, at current levels. It's partly a retailer, but it's also partly a property stock. And when you look at the result today, there was a reduction in some of the valuations of their properties as well, because they run a franchise model different to a lot of the other retailers. So, yeah, if you've got it in your portfolio, again, similar to the experts, I'd be holding it, but I can't really see that I'd be buying it at current levels.
David, just to the other point, how would you rate the overall reporting season? We were talking about a third basically being a beat and a third being a miss.
Yeah, probably, I don't know, a C, a B plus as far as the overall
needs improvement
reporting season's concerned. Have to say, though, the expectations about reporting season were reasonably muted going into it. So in some respects, we've probably come out a little bit better than what the market was anticipating. But as you said, it's been very, very volatile. So it's been very company specific. We've seen a lot of movement, not so much in the index itself, but in the individual share prices. So those that have come out with good results have been favoured by investors, but some have been punished. So yeah, probably a reasonable outcome overall. But yeah, a stock picker's market.
Indeed. Just some of the stocks that we did get today, I guess it did tie into some of those green metals and that kind of overall kind of green thematic in the form of IGO, and also to an extent Sandfire as well, which is quickly becoming people's chosen play on copper. Any key takeaways there, especially, I guess, the odd view as to whether they offer any value at current prices?
Yeah, well, IGO, as you said, was a good result. They've increased their dividend and paying a decent dividend there. It's not a stock that we actually cover officially, but the result, as far as the market was concerned, was a positive one. And again, Sandfire, slightly positive. Their result was a little bit better than what the expectations were. We saw the share price increase a little bit today. We actually do like Sandfire as far as an exposure to that copper market. So we've got an accumulate recommendation on that. Our analyst will be reviewing it in more detail and come up with an updated recommendation overnight. But at the moment, his initial view was that the result was quite a good one.
Look at Qantas, down almost 3% today on the back of that ACCC action. Longer term, though, it was a really good result from Qantas. Is this just kind of a sell the fact story today?
I think so, yes, and was actually looking at the fact that I was lucky or smart to sell Qantas around $6.75 for a number of clients earlier in the month. That really we think that Qantas has had a great result, but it's probably seen the best environment that it could have possibly had. There is definitely still a lot of pent-up demand for travel, but as we've been seeing, there's a lot of political pressure on not only Qantas but the overall industry to look at their pricing. The ACCC case today won't help it. So, we've got a hold recommendation on Qantas, but I think we'll see a fair bit of share price pressure or pressure on their share price in the near future. So we actually like some of the other travel stocks, the likes of Flight Centre, which came out with a good result. Webjet, we still think is very good value as well. So I'd probably be playing those rather than through Qantas.
David, great to get your insights to wrap up the reporting period. I hope you do get a well-earned break. I'm sure it's been, twice as busy for you as it's been for us. So we'll talk again soon. David Lane there from Ord Minnett.
Will do. Thanks very much. Appreciate it.
Okay, let's get across the leaders and laggards now, of course, starting with the leaders. And what are we looking at there? IGO, a late rally. It was off to a good start, but certainly pushing higher throughout the session. Obviously, David just mentioning there, Ords doesn't mind the look of the stock, still looking to update potentially its recommendation on the basis of today's results. But that, special dividend from the company certainly helping heal the wounds of that surprise impairment charge the business sustained at one of those key mines that it managed to acquire over the last 12 months. But Juliet, Harvey Norman on there as well. So as David was saying, sure, not a great set of numbers objectively, but still maybe a little better than expected.
Yeah, absolutely. And that was always kind of the interesting thing, isn't it, when you've got such a bad news story kind of factored in. If there is a little bit coming through in terms of the upside, then people will buy in. So 4.7% pop there coming through for Harvey Norman. Life 360 is another stock that did really well today. It was up by almost 4% on the close. So some very big large cap market leaders coming through there on what is, as you mentioned, also the final day of the month. So perhaps a little bit of some window dressing there too. Yeah,
without a doubt. Laggards now, let's take a look across those. Whitehaven Coal, I think that might have gone ex-div too, mind you.
Yes, it did.
So a pretty chunky sell-off off the back of that, but nevertheless down 9.5%. Certainly well off the highs of last year when everyone was getting very excited about coal once again, and it was above $10 per share. Sayona Mining has been a roller coaster this week. Its managing director abruptly stepping down off 30% at different stages, or actually off 30% in a day on Monday. Bounced back a little bit, but down once again. Can't say that's necessarily a lithium story, though. There has been some strength across some of those other lithium names today. Meanwhile, Webjet also off by 6.45%. Magellan off by a similar margin. Chalice Mining is actually down by around 30% in the last 12 months. And this is where these mining stocks can sometimes get a little bit confusing for little old me. It takes an engineering degree to seemingly understand them sometimes. But there was an issue with the prospecting, I think they did, or a scoping study, and maybe some questions around the value that they placed on the palladium that they scoped out. So again, wouldn't be able to tell you much more than that, but it's down by another 5.3%, which basically takes the drop in the share price to about a third in the space of 24 hours. So pretty painful there for Chalice Mining. And let's get a quick look at the small cap leaders and laggards. A bit of a game of bingo, as it always is. Healthier. There you go. 80%. Healthier by name, healthier by nature, up by 80%, I guess. I don't know if there's anything there necessarily. Obviously, it can just be a volatile stock.
It had record gains on robust annual performance. I wrote that one down. So that was a very big jump coming through in what is the small cap space. 29 Metals Limited also looking pretty good. Again, there of around 19%. There was some quite big moves coming through in some of these small caps that aren't even listed on the top 5 that we have there too. I was also looking at Airtasker set for its best day in about 3 months, so it saw its annual loss narrow, so it was one of the front runners too. NextEd there is up by an impressive 35% on the close, so of course small moves in the small caps mean some really big percentage gains.
Yeah, absolutely. Laggards now in the small cap space quickly proves that Main Farm and X-Science, Peninsula Energy, 40S memory just moves like you wouldn't believe. It was up, I think it was you and I sitting here last week when it was up 100% on the day. So anyway, that's the small caps there. Again, also wrapping up, of course, reporting season. Let's take a quick gander on what's on overnight. And things get pretty, well, not necessarily hairy, but pretty busy over the next 24 hours. Starting off with the US PCE data.
Yeah, US PCE for July and also Eurozone unemployment figures, which are going to give us a pulse check as well for what's happening with the Eurozone. Of course, we heard from Christine Lagarde at Jackson Hole, and that is a story that we should be watching in detail too, the slowdown of the Eurozone. But the main one, of course, for this week is really going to be those payrolls numbers. So you would expect that it would be a little bit of a cautious trade on Wall Street ahead of those, which are going to come through, of course, on Friday.
Yeah, definitely. And as we said off the top, as the case is here in the United States, the final day of the month, so all kinds of interesting things can happen with all of this going on. Last but not least, let's see how we're going to wrap up the day tomorrow and what data that we do have. Global manufacturing PMIs, I think that's the final print there. So just a bit of confirmation on perhaps the flash figures that we did get. Ex-dividend will be interesting to watch. Coles, Aluka, And what's SLH? I've forgotten off the top
Is
of my head.
that Silver? Silk Logistics Holdings,
yes.
so delivering solutions. So the logistics services provider also going ex-div tomorrow.
And some, interesting housing data, of course. The first of the month, so we'll get those CoreLogic numbers that everyone likes to follow. Talking to a few folks, actually, just behind the scenes here, suggesting that things are really starting to ramp up again in terms of loan demand.
Yeah.
So talking to some brokers. So that's really, really interesting. Something to keep an eye on and see if that's manifesting in the data in August. But again, that's for tomorrow, first day of spring.
Yeah, I can't believe it.
Yeah, I know, September, right?
I've had a month of basically winter and now back to hopefully some nice...
Yeah, well, did you dodge winter?
I dodged most of it. I mean, I've dodged winter for 6 years, Kyle, living in Singapore,
exactly.
right? And so then
Equatorial,
I found
right?
all these, jumpers and jackets, and I was like, this is new and different, but a month is enough. Looking forward to spring.
Yeah, without a doubt. We'll bring that on. But as you can probably tell us recently, there's the hay fever for you. Nevertheless, let's wrap things up there. Again, you can catch up on all the news and interviews on your website now. Let's get a final market check just before we do finally say goodbye. And the CBO 200 was up a fraction by the end of trade, and the ASX 200 has finished up by 0.1%, above 7,300. So we'll take it if no other reason than above that sort of.
I think it could have been a lot higher if you didn't have some of those big stocks like Woodside, Woolworths going ex-div. I mean, BHP, CBA, both up by about a third of 1%. Westfarmers up 1.5%. So take it as a win anyway.
Absolutely. And actually, you know what? While we're at it, I'll just see where we finish the month of August, because it is the 31st, and we've managed to narrow the loss by virtue of this fairly strong performance this week. So 1.4%. So not as bad as it certainly could have been. But anyway, again, we'll pick it up tomorrow. Have a great night. We'll see you tomorrow morning.
See you.
The COB is presented by Rabobank. Awarded 2023 SMSF Savings Bank of the Year by Mozo.